Welcome you all to another episode of Who Got the Keys? Well, we are.
Unlocking doors to generational wealth.
I like that. I like the sound of that.
Me
Who
too.
got the keys? Who got the keys? Who got the keys? Hey. All right, you all. So I'm your co-host. My name is Donna Rogers.
And I'm money making Mac.
Yes, here we go again. And we are representing our family, the Rogers legacy, our legacy. And so we are here to empower you to help you create yours. And so, Mac, tell the people what's the topic of the day.
Today we're talking about the different ways that you can invest into real estate, which I think is a really, really hot topic.
It is. It is. More than ever, the different ways that you can invest in real estate. Yes.
Yeah, and before we start this, I'm gonna give a shout out to Donna because you take a lot of time to get ready for the show. You look just outstanding today, right? This is the only day you looked outstanding. But
such a
shout out
younger
to our
brother,
legacy.
you all. Such a younger brother. The sarcasm is real.
But let's jump into it, right? I want to we give out keys every
We do.
episode. We
We
do
do.
a good job of doing that. But this real estate thing is a way a lot of people create a lot of real wealth, right? And a lot of people think they can't get into it. So interested in seeing what you want to talk about today because we have it's probably almost 20 years of real estate experiences at this table alone.
is.
I never thought about that. It's a lot of experience, right? And I consider Donna one of the gurus in asset management space. 30 million of experience. You've done everything. People don't know that.
Yeah, just about.
Yeah, they don't know that.
Just
So
about.
my question, I'm always learning from you, right? People want to get into real estate today. What are the different ways to invest into real estate?
The different ways to invest in real estate. Well, first, you need to know what exit strategy works for you.
Wow, that's a different. You kind of reverse engineering this thing. What is an exit strategy? Let's simplify it.
Sure.
What is an exit strategy?
Sure, great question. I'm so glad he asked. So, y'all, we think about exit strategy. You're basically saying what is the plan and purpose that you have for investing in this property,
Okay.
aka what's your exit strategy. And so, you need to know, and what we'll do is drop the keys on what the various exit strategies are for you to first know which one works best for you, and then figure out how you want to acquire that real estate.
Nice. So I need to have an exit strategy before I enter into this game.
Absolutely, absolutely.
This is like my favorite analogy. When we play Monopoly, you got to know how to win.
Don't
the game.
play with him. He cheats, you all. Shout out to his kids. He cheats. Daddy cheats.
So let's jump into it. Real estate guru Donna, can you explain what these different exit strategies are?
I will. And then I'm going to promote myself. Well, first, I'm going to promote myself and give a shout out to this book, Who Got the Keys, in chapter 3, which is called Buying Up the Block, right?
Chapter 3.
Where we talk about the different exit strategies in investing in real estate. And so there are different exit strategies. We're going to go over all of them and share our experiences. And so we have our, first, I want to say the fix and flip. And so you all see a lot of things on TV, what's considered reality, but we hope to give you the details that reality TV does not show when it comes to fix and flip.
HGTV just popped in my mind. A 30-minute episode will ruin your life, and you try to go out there and do it yourself.
Because it's not enough time, and shout out to them, but it's not enough time given to give you the details to really understand what it all entails to do fix and flip. And I would say, and AKA is rehabbing property, right? You got to know your numbers. Everything is about the numbers. And shout out to our dad, in memory of our dad, John Rogers, because again, my dad is who exposed me to flipping properties, rehabbing properties. He did it all himself. He was like this one-man team a lot of times.
Let's ask this. I wonder if you know this. How many properties have you flipped? I got a number in my head. I want to see if
I don't have a number. I honestly can't remember. I lost count. That's a sad thing.
Well,
But I
let's
have.
get a range. I want.
No, I really have.
Your number is pretty big.
No, I can't remember, but I've done almost like 5 at the same time. So
I think your number has to be like 40 or 50 flips in the last 2 years.
It's in the last 2 years, possibly. Yeah.
That's a
Some
lot
for
of damn
myself,
flips.
other people. So yeah. But I want to say this: we both have experience in doing it. You have to, you dibble and dabble to see what works for you. But the first exit strategy in real estate is the fix and flip. It's the rehab property. And when we're thinking about fixing and flipping, one of the things that's very necessary, that's important, is understanding how to analyze deals with property. You have to know the numbers. It is not just you buy this property, you fix it up, it's beautiful, and you sell it for whatever you want to sell it for. No, you're going to find yourself at a loss. So when we talk about fix and flip, it's basically I'm buying this property. I'm trying to get the best deal as much as possible off this property because I know if I fix this property up, I can make a certain profit. How do I know that I can make a certain profit? Because when I brought along my licensed contractor before purchasing the actual property, we did a walkthrough of this property to identify about how much it's going to take you to fix this particular property up, right? And so based off the price that they're asking, based off an estimate of what your contractor is saying that it takes to fix this property up, you want to look at your profit margin. How much money can you profit off this property once you sell it? So you're fixing and flipping it up so you can sell the property for a higher price than what you purchased it for after you rehab it. Now, that just doesn't sound that simple. It's just not that simple as it sounds, I
You
should
made it
say.
sound easy as hell. I was thinking about how many. I'm like, I can just go do this tomorrow.
No, you all. Let me first say, start with really getting a skilled contractor. And they not only need to be skilled, you need to check out people's character because I know a lot of horror stories of people, and I've experienced this. People run out with your money.
Wow.
People won't show up for work.
Wow.
People will tell you they could do something that they really can't. And make sure you have a contractor that knows how to do some of the work themselves. You have some people that are licensed contractors that does not have a specialty, does not know how to do the work. They just have a team that do the work for them.
Wow. So how do we, for the viewers, how do they find a good contractor? Like, how do you know what a good contractor is? Because there's so many horror stories. I know from your experience.
Yeah.
I can see from your face. They can see from your face. Like it's like stress. Like how can they find good contractors? Where do you go? What do you look for? Things of that nature.
Networking is key in business. Period. Right? Any business that you're in. Networking meaning, you ask other people that's in the industry, people who have experience doing this. You interview individuals, you ask people about their character. A lot of times in general, when we interview people, we overlook the importance of character.
Wow.
So we look so much for skill set.
That's a key. Can we go back to that key real quick? The skill set is just as important as the character of the person that you're hiring. I never thought about it.
It is. People overlook character so much. Let me tell you something that one of my favorite pastors said years ago was that your gift will take you places that your character won't keep you. Shout out to TD Jakes. Love your ministry, but your gift will take you places that your character will not keep you. And so you want to look at character because you're not trying to just get a one-time show. If you plan on doing this for a long time, you want to develop relationships with individuals that you can keep for a while, that I could just put keys in your hand and trust and know that you're going to get the job done and still show up. But not to give the people too much, I want to go back to making sure that I really break down this fix and flip. And so you're identifying a property as a certain purchasing price. You basically go inside the property and do a walkthrough. Wow, I can really do something with this property. You want to have, if you don't have a real estate agent, get one until you learn how to do comp analysis for yourself. And what you are looking at what the market value is of that property. That's different from an appraiser. An appraiser will validate or solidify that property generally for a lender. So a lot of times you don't even have access or have an appraisal done. But you want to have an agent or a skilled investor who knows how to do a market analysis. That is where I'm looking at suitable properties within the same area, within a certain condition and a certain size, and looking at the average sales price to compare to the sales price of the property that you're interested in. Let me give you an example. Malcolm, if I'm looking at a property, in particular on the south side of Chicago, let's pick South Shore, and it's a 6-bedroom and 3 bathrooms. It's fully updated. It has a basement. It has a garage. Then what I want to compare it to is other six-bedroom apartments with 2 bathrooms, with a basement, with a garage that's updated, that's in the area, that's currently on the market, that's currently under contract, and most importantly, that have recently sold. That's how you do a market analysis generally. I want to compare other properties that's currently on the market, that's currently under contract, and most importantly, that have recently sold within the last 30 days to get an average of what the value is of this property that I'm interested in. Now that I know the potential of what this property can sell for.
I want to ask a question real quick.
Sure, real quick, because he just broke my zone, right? I was in the flow.
I know you're giving them nuggets, but I want to make sure that they understand. Is there a cost to getting that that market analysis done for the property that you're trying to buy? And who can get that done for you?
Well, you can learn to do it yourself. And I'll be honest, what you see on the internet is generally not correct. And so most real estate agents, if you're not hiring them to be your agent, they are going to charge you, to run that because that's work for us. But if they are your real estate agent, then they should be willing to do a market, aka a comp analysis for you to determine the estimated value of how much the property is worth in this market, not the last market. Markets change. And so don't look at a seller and say, oh, they purchased it for this amount, they should sell it for that amount. What the seller purchased the property for is irrelevant to what they're selling it to you for.
Can you say that again? I think people get hung up on that.
That's a big one. What a seller purchased a property for is irrelevant to how much they are selling it to you for. Because it's a different market, it's different situations, different circumstances, different factors as to why they're selling it for what they're selling it for.
So for all those people out there right now who got too much information about a deal that they trying to get done that they didn't have on the contract for the last 3 months, do the damn deal, man. Do the damn deal.
Don't lowball. Negotiate. Yes, absolutely. But don't do that. So just to get back to that process of that fix and flip. And so now that I know that, let's say this property is currently on the market for $150,000. And I know from doing a market analysis that I can sell it, let's say for $300,000. Well, I bring my contractor through to give me an estimated quote. And let's say the contractor give me a quote for $50,000. I'm just throwing out some numbers. $50,000. Even if the contractor gives me that quote for $50,000, Malcolm, from my experience, it's generally going to be more than $50,000.
Oh, wow.
And so you just kind of have to have a cushion.
I thought you were going to say something totally different. Hey, you're the guru here.
It's never the number they give you. I mean, I have not had one experience where it's the number that they give me.
Wow.
And so because things come up, it's things behind the wall that they don't.
Right.
They
so it doesn't necessarily mean that they're a bad contractor.
Absolutely not. But the reality is they cannot go in a home that you don't own and they don't own and bust a wall open to see if the pipes are in a certain condition. They don't know that until you own it, and now they have authorization to go in and remove what needs to be removed to get a full analysis of the condition of that particular property. So in a nutshell, you find the property purchasing price, $150. Say your contractor gave you a quote, and I say do more than one contractor, right? And just say you have a quote for $50,000. I'm gonna look at that and say, I might be spending $65,000, right? Just throw some $10,000 to $15,000 cushion. From my experience, that's what it's been.
That's actually a rule of thumb,
Yeah.
In project management, which is what you're doing, you're flipping.
And he's certified.
Yeah, I'm certified. They typically tell you a 10 to 15% buffer.
Yeah.
So you picked it up over experience.
Yeah.
I paid for it in a book. But you're absolutely right. You're right. Another nugget right there. That's a key.
Exactly.
Another key.
Whatever amount that they give you on that quote to rehab that property, generally it will increase.
Yeah. It needs to be 15, 20.
Yeah. So just be ready for that. If it doesn't happen, kudos to you. Then, you under budget. That's more profit. But so $150,000, $50,000 to rehab it to 65, I should say. And then let's say that that it could sell for at least $300,000 in this current market. That's a beautiful thing when you think about what your profit margin is. But here's what most people miss out, Malcolm, because that's what reality TV shows. You have other costs, ladies and gentlemen. What are they? Who's paying that mortgage?
Wow. This is getting pretty expensive.
Yes, but who's paying that mortgage while you own that property? You want to try to flip within the 3 months, no more than 4 months. The sooner the better. You're trying to hurry up and flip and get your money, your profit as soon as possible because the industry changes. And in Chicago, where, the weather, you going into the winter months, you talking about that gas bill. You got to pay that gas bill while you fixing it up.
I'm guilty. Yeah, I'm guilty. I flipped a property in the wintertime, and it was just not the best experience. And I remember you telling me, Malcolm,
gas is high.
I put this property on the market.
The gas is high. But I'll say this, is a pro and a con to doing it in the wintertime in places like Chicago. Most of the contractors are available. They're looking for work during that time. So you may get them to be more consistent in getting the work done. But the gas bill and utility bills, they tend to be higher during that particular season. And so you got to pay those utility bills, ladies and gentlemen. You have to pay that mortgage. They're called holding costs. How much
Wow.
does it cost you to hold the property until you're able to flip it?
Can
That's
you
what you
give it
generally
to him one
don't
more
see.
time? One more.
How much does it cost you to hold that property until you're able to flip it, aka until you're able to sell
And
it?
what is it called?
The holding cost. That's your
Wow.
mortgage. That's the utility bills.
Another key.
That is your homeowners association. If it's a condominium or it's in a gated community, you may have to pay the association fee. And then when you sell it, you talk about your real estate agent fees. And I always suggest if you can get an agent, statistically, your property will sell for 11% higher with a real estate agent. You have to pay an attorney fees. It's different fees that you have to pay to sell a property and purchase the property that you need to factor in when you're flipping property.
So is there with holding costs? Is there a percentage that you've seen, or is it different per project?
No, it's different per project, depending on how much the mortgage is, how much I purchased that property. And maybe someone else may have their numbers and be a little more savvy in that, but it varies. It depends on the community. It depends on what type of property, different things like that. More importantly, Malcolm, it's about how much do you want to profit off that property and what may work. 25,000 coming in for a new beginner, a newbie. Sometimes 10 or 15 is great for a newbie, right? But the more savvy you get at it, you want to profit more money off of it, the more savvy, because you have systems in place. You got your team in place. You get in, you know how to work it right. You know how to pull those permits. You know who to talk to. And so it's a lot of little details in flipping property that you need to be mindful of.
So in my opinion, flipping is kind of the household conversation that people have. I want to flip this property, get this. They see it on HGTV. They see it all over YouTube, Instagram, people flipping homes. But nobody talks about the other things that is not as glamorous, or they don't put these other extra strategies on TV, right? They're boring. Some of them are boring. But you have experience with those too. So what are these other things, other exit strategies that, investors can do when coming into real estate?
Well, this is one, Malcolm, that we're both very savvy in, and that's the buy and hold, and that's AKA rental properties. And so you could share a little bit with your experience with buy and hold, with renting out properties. And what do you look for when you're looking to invest in a property that you're going to hold and rent out for people to live in?
Money. One word answer. No, usually when my real estate deals, I actually look for cash flow, right? It depends on what kind of deal. I'm more so in the commercial space than residential space nowadays. But even when I did the commercial space, for example, if I get a multi-unit duplex, triplex, fourplex, I have to make sure, and I try my best when negotiating a deal to understand and have in place that one unit can cover the mortgage. That's my goal. If one unit can't cover the mortgage, I start to look at the deal a little bit different and say it may be a little bit too much risk for me, right? Because I'm in this for the cash, right? I also look at, when it comes to buy and hold, more so today, what people don't talk about is if I'm looking for buy and hold and the rents are low and I know that the rents can go higher, my first deal you deal with me and say, Malcolm, you can get about $1,300 for this unit, which I said, okay, cool. I can move these rents up and make more money once I acquire it, which makes this property more valuable. So I look for, is there value add with my buy and hold properties, right? And typically, when I'm looking at a property, I'm reverse engineer. I'm a buy and hold guy, but for me, I like to sell. I like the big bucks on the acquisition side at the end. That's why I think the most wealth is at, right? So I reverse engineer. The same thing you're talking about today. I look at the property and say, well, how much money can I make? I do a couple ratios. I actually look at the internal rate of return, which we can talk about that in another episode. But I look at internal rate of return. They call it the IRR. I look at that for every deal. I actually compare that in deals and say which buy and hold deal is the best, which one has the highest ratio, which leads me to invest into it. But my buy and hold deals, I typically go in. I look at seeing if it's the Section 8 tenant.
Yeah.
And if they have a Section 8 tenant, which is government money, guaranteed money for me to come in, then all the boxes are checked. I do the deal. I used to walk away from deals that were good. And I know it used to piss Donna off. Look at her face. I know I used to piss her off, right? But now I can walk into a deal and I walk the property and instantly know this is the deal for me. And I'll say this too. This is a key. You talked about this briefly in flipping. But on the other side, with buy and hold, you need to do your numbers before you walk the property, right?
Yes.
I don't go walk any properties unless I know that the deal is profitable for me, right? A lot of deals, I go fly to those places and walk them once I know that the numbers add up. But if the numbers don't add up, it's no need to waste your time, the seller's time, the realtor's time, because they're pissed, right? Because time is money, right?
It is.
So I look at those things when I'm trying to buy a deal.
So you talked about numbers, just when we looked at with the flipping, what are some of those line items that we look at, those expenses for the buy and hold, what are some of those numbers in those formulas that you do to calculate to make sure that it makes sense for
No,
you?
you get into detail
I
today.
am, because the people want
Yeah.
to know, right?
So I'll tell you guys, I do a really heavy due diligence, right? And my due diligence process has gotten longer and longer, right? So nowadays, when I do due diligence, I ask for what's called the rent roll, right? A rent roll is basically a transcript of the property, is what I call it. Tell me how much money everybody's paying. Tell me when everyone leases in, and tell me what type of tenant it is. Is it a government tenant or is it a cash tenant? That lets me know what kind of risk I'm taking on, right? Now, outside of that, the other things I ask for is I go and ask nowadays, hey, have there been any capital improvements on this property in the last 2 years? I need to know, because when you're buying property and buy and hold, if Donna just replaced the roof, either my premium on insurance can be higher or lower, right? A newer roof.
Repeat that for the people. That was a
Yeah.
major key.
When you're buying a property, ask for the last 2 years of capital expenditures, improvements. What kind of improvements have been
Yes.
done here? Why? Because insurance, and insurance, by the way, is high as hell nowadays,
Yeah.
right? The market is not good for insurance. So you want to know, hey, I'm coming in. Has the roof been replaced? Has the boiler been updated recently? What's up with the electric? Have you guys replaced it in the last 2 years? Because I want my premium to be lower, because the insurance company, they don't want the risk either. So
Yeah.
I look at that ratio, right? Another thing, and I want to shout out to my father, he taught me all these things, is I personally buy and hold, I go look up the taxes. I want to know what the taxes are, because
That's
that
a
could
big
really,
one. That's a
really
big
kill a deal.
one.
So that's another key. Go look up the taxes at the county and see how much the taxes are for this property, so that you can understand your cash flow, right? Now, outside of the taxes, what we also do is we go look and we go pull the deed. I want to see if there's any liens on the deed. I don't want to buy a property that has liens on it. Now I'm stuck with this property I can't sell. I'm looking for mechanical liens. I'm looking for medical liens. I'm looking for these things.
And just so the people know, the mechanical liens are when you don't pay your contractors, ladies and gentlemen, they can put a lien on your property, and it has a high priority. Okay, so just know that when you talk about the liens, and a lot of time your attorney, or if you're working with a title company, they'll be the ones to do the research to identify if it's any liens on that particular deed or title of their property.
Absolutely. Thank you. Donna is like a dictionary up here. She's so intelligent. But with the buy and holds, I'm going to tell you guys I do. And all this stuff I'm talking about doing is for free. You can analyze your deals for free. And I'm big on that. I personally use Redfin calculator. I go to Redfin. I use their calculator. Why? Because Redfin is pulling in the taxes. It'll let you adjust the insurance. It'll let you adjust the down payment. So now I have my numbers to really calculate how much cash flow I'm gonna make off a deal. So if I'm making $1,000 a month off a deal, historically that's what I used to look at. First deal, very simple. That means I'm making an extra $12,000 a month. So if my salary is $50,000 for the year, I have created my own income, right?
Right.
I don't have to submit a resume. That's why buy and hold is so important. I get there now.
is.
Now I'm at $62,000 for the year,
is.
and I'm getting government money.
Yeah.
Section 8 throughout the whole building. I don't have to worry about getting payments, things of that nature. So with the buy and hold, for me, I like it, but I do exit it after 3 to 5 years, which some you talked about with your own businesses that you look for.
You do. I have a property that I bought, I want to say 2019, I believe, September 2019. I purchased that property for $130,000. Two tenants, just a two flat. But one, I had a voucher holder, paid the whole rent. Then I had a tenant on the first floor. They covered the mortgage and then put money in my pocket to pay the mortgage on another property.
Nice.
And so it was a very profitable property, but in transparency, towards the end, when I was getting ready to make the decision to sell it, the tenant on the first floor started just falling behind, wasn't paying rent. And so I was at a deficit. Ladies and gentlemen, trying to evict a tenant in the city of Chicago is a task. It's a task.
It's horrible.
It is.
You said it the nice
It
way.
is. It's backed up and it's pro tenant.
It's a shit show.
It's pro tenant. And so a lot of times you're better off paying a person to move. Yes, paying the person to move who already owes you money. But why was that not a problem for me?
What's the term for that? Paying a person to move?
I can't even think of it. It's almost close to keys for cash.
Cash for keys, yeah.
Cash for keys. And I had to pay her money to put the keys back in my hand. And so I purchased it for $130. 2023 January. Closed on the property $300,000. So sold it for $300,000. I had to put almost $40,000 into it because I had to replace the roof. I had to fix some foundational things and some tuck pointing. So let's say $170. which was good. I'm a real estate agent, so that commission that I generally would pay will have to pay for 2 agents. I only had to pay one. And so again, you do the numbers out of purchasing it for 130, putting around 40,000 into it, then paying the closing costs. I still sold it for $300,000. And so
Wow.
I buy, it was a buy and hold initially.
I know
And
who's paying
then I
for
had to
dinner.
do the update. No, dinner is on you. And then I
I
had
know who's
to,
paying for dinner.
do some updates. You want to make it marketable, but I didn't rehab it. I did not rehab it. I did some major repairs, just as Malcolm spoke to, put a new roof on it, the things that will help them get their insurance premium down, and bring the most value to the property. And so one tenant is still in it, and it's a good thing that I can say that one tenant still covers the whole rent. And because it's a renter's market, the rent is getting raised by $500 as well.
What does it mean that it's a renter's market?
It's a renter's market. So for owners, this is the time where a lot of people are making a decision to rent as opposed to buy right now, just based off what's going on with this economy not being stabilized right now. And so for landlords, what that does is you have an opportunity to increase your rent. It has to be reasonable. Run your numbers, your market analysis. You do a renter's analysis to see what the average rent is for comparable properties in the area. But it's a beautiful thing for me. And so, it just goes back to us saying, know your numbers, know how to analyze, know when it's appropriate to take different strategies, whether it's a good strategy to fix and flip. There's properties, we had to buy and fix it up before it got rented out. And there's properties you may buy where it's fully rented out. And then there's properties where you don't want to rent it out. You just want to fix it up and you want to flip it. What is the determining factor of making that decision is running your numbers and knowing how to do the proper analysis for them. And so we spoke about 2 strategies. There's another strategy.
It is, but you know what? I want to make sure I drop these 2 keys, right? You said something that triggered and made me have another thought. And one of the things we talked about was the rent roll, which is a transcript of the property. One of the things I look for and I advise people to look for is to make sure the rent roll includes the lease end dates, right? And why is that important? I typically try to buy properties where the leases are going to end in the next 6 months. Why? I can increase the value of that building faster, right? Or they got month-to-month leases. Okay, cool. I can come in and jump the rent prices immediately and get more cash flow. Now, outside of that, something I forgot to add is when I look in areas nowadays, and I like to partner with the government a lot, I actually go and look at HUD rental rates, right? I want to know in this zip code, how much money can I get from HUD? Because I really don't like cash buyers as much because the money's not guaranteed, because I don't like the experience what Donna did. I've been through that, trying to evict somebody from 6 months. All it does is piss you off, right?
Yeah.
You start to take it personal.
It's a tax write-off, but you prefer to have your money.
But you take it personal. I got I got a friend right now who's trying to get somebody evicted. Come March, it'll be a year.
It happens, especially in the city of Chicago.
Listen, if you don't know, when it comes to evictions, you can go to trial to evict somebody. And he went to trial and he lost.
It depends on what state you're
Oh, my
in.
God.
Right now we're in Texas. We're from Chicago.
Texas doesn't play that.
Yeah, Chicago is very different.
Yeah,
And so
Texas.
you definitely want to look at that. But Malcolm is bringing up a good point about the rent roll, and something that I know that he looks up as well is you want to know, are there tenants that are behind on their rent?
Oh, yeah, delinquencies.
You want to know that, because guess what? Then it's your responsibility to evict that tenant. So you don't want to walk into delinquencies. You don't want to walk into headaches. And so you can say to an owner, hey, you have the responsibility of removing that tenant before we close, and to see how long it takes to get them to close to make that decision. But again, you don't want to walk into those negative situations where you think you're going to be making a profit, and it turns out you're not, because now you have inherited these delinquent tenants.
I hate that situation.
Yeah.
I avoid it. I wouldn't buy a car with a hole in the floor.
Yeah.
Right? It's like buying a car with a flat tire. Well, it runs, but I can't drive it.
Yeah.
That's one of the bigger problems.
That's definitely a question you want to ask about the tenants.
Absolutely. So outside of buy and hold, we went through pretty thoroughly, dropped a lot of keys there. You talked about fix and flips, which you're really an expert in. There's 2 other ways that we want to talk about today, as far as ways that you can invest into real estate. And the third one is?
Absolutely. We're going to get into wholesaling, but I hate to go back, but I we are so passionate about dropping these keys. I want to just make an important disclaimer about fix and flip. Do not rehab a property over the value of the property. Just because you put these chandeliers and you put this nice materials and stuff doesn't necessarily mean that it's going to go up to a certain value that you think it should go to. That's why it's important, again, to do that market analysis before you purchase this property, because I have seen people over rehab a house and then get upset that the value is not there.
Wow.
So be mindful to rehab the price at a certain amount in which it will be worth based off your ability to make a profit. What am I saying? If I purchase it for $150,000 and I know that, hey, it can sell for $300,000, then I'm not gonna be like, oh, okay, well, you know what? I'm gonna put $75,000 in it instead, and then that's gonna make it worth $350,000. Negative. Because what the other people in the area in the same condition, their property, they tell the story of what people are purchasing this property for. And guess who else is going to look at that? That appraiser. That appraiser is going to look at what the other properties in a similar condition is selling for. So I just had to give that disclaimer, because that's a big one that I see people over rehab properties and then get upset that it cannot sell at a certain value.
So don't get emotionally attached to the asset.
That's a good one.
Don't get emotionally attached to the asset.
That's a good one.
So
that's a good one.
I'm glad you circled back with that, because they need to hear that.
Absolutely. So just know what you should focus on. People, the kitchen and the bathrooms are the major rooms, and then spread out from there. Okay. For the sake of time, we'll move on and give you another key on an exit strategy. So I'm not as experienced in this one. I'm well knowledge of it, but wholesaling. Wholesaling is another exit strategy.
It is. I got a friend who does a lot of he doesn't, but you know what? He doesn't wholesaling. He doesn't wholesale. Mm-hmm. He holds. Is that a term?
He hold and hold.
We
don't let Malcolm work that out.
Let me explain what he does, right?
Okay.
I had an opportunity to buy a property with him this past year for $5,000, and I didn't do it because we didn't have the same exit strategy. He wanted to buy and hold, and I wanted to say, let's fix and flip it, right? What he does is he buys off the market properties for cheap. He buys it from distressed owners, and instead of selling it, he fixes them up and he keeps them and he rents them out, and then he goes back and pull out all the cash from them. So it's a pretty good strategy. It's pretty slightly different from wholesaling, but it's a strategy.
It is. It's somewhat the same. What I'm gonna first explain wholesaling and then just kind of add on my little keys to it. So basically, a wholesaler buys as is with the goal initially to sell as is. So you buy low, extremely low property. Let's say I purchased this property maybe for $100,000. It's extremely low considering whatever that market is, right? Because it could be $1 million, but the market could be a $3 million market. So it just varies. So you're trying to buy as low as property as is. I'm not putting any work into this property, and I want to sell it as is. How does that happen? Because a lot of times you do go find distressed buyers, people who are just eager to sell. A lot of times they may or may not have a mortgage on the property. And if you're in a position where you can offer them some cash or different things like that, and to quickly take this property off their hands, they may be willing to do so. But what happens is a lot of times that wholesaler is not spending money out of their pocket. They have already found another investor that has the cash to purchase that property. Why would they purchase that property? Let me give you an example. I go to Malcolm and say, hey, Malcolm, I purchased this property from you. Let's say that it has a mortgage on it for $60,000. I say, hey, Malcolm, I purchased this property from you for $75,000, right? I purchased this property for $75,000. I've already done my research on this property before I even give Malcolm a call. I already know what the property can be worth fixed up, and I know what the property is worth right now. A lot of times a wholesaler will offer you $75,000 knowing that their property in its current condition may be worth $100,000. But you, the distressed buyer, doesn't know any better, and you're desperate. Desperation is a bad thing in negotiation. Wow. Okay? So I'll go to you and say, I purchased this property for $75,000. Unfortunately, normal people, let me not say normal people, a lot of people have never had 10, 15, or sometimes $20,000 at once. So that just sounds like a lot of money,
Fact.
right? And so, you may take the 75 or say 85. Either way, I'm good because I know it's really worth $100,000. And the average person who owns a home is not doing this research and knowing how much their property is really, really worth outside of their tax bills. And that's not really your market value.
So knowledge is leverage.
It absolutely is. That's why we're giving away keys to open up doors to build generational wealth, because
I
knowledge
like how
is
you
leverage.
transition to that.
Absolutely. We're going to plug all the time. So I'm coming to you to say I purchased this property, let's say $75,000 to Malcolm. Well, let's say I go over here to my investor friend, John, and say, hey, John, I got this property for you. I'll sell this property for you as is, and I'll sell it for you, let's say $95,000, right? John purchases the property for $95,000. What happens? On the same day that I'm buying this property from Malcolm, John is purchasing it from me. So I never really have to come out my pocket. Malcolm doesn't meet John. That's my investor. Right? And so I will schedule these transactions to take place on the same day around the same time to make the exchange of ownership as quickly as possible. Who's making a profit on the difference of their property of that 75 versus that 95? I am, the wholesaler.
Wow.
So why would John buy this property for 95? Yes, it's worth $5,000 more. But for an investor, $5,000 is not a lot of money. John is purchasing this property as is for $95,000 because he knows either he can fix it up and buy it and make a good profit, or he can fix it up and flip it and make a good profit. So investors have done their own assessments as well. Normally, me as the wholesaler is going to come to John and say, I already ran the numbers for you. Hey, if you do this, this is the profit that you'll make. But the wholesalers buy as is, sell as is. I make the difference between the two and I walk away. That's generally in a nutshell. So if you see those, we buy ugly homes, my mom buy homes, these little signs on the side of the street, those are generally from wholesalers.
See those signs all the time. I'm like, why the
Yeah.
hell would you buy an ugly home? But it makes
Yeah.
sense. You broke that down really, really simply. So now there's another big term that most people don't hear about outside of wholesaling, and that's seller financing. I really want to pick your brain
Seller
on that.
financing. Let me give the disclaimer about wholesaling. I don't want to knock wholesalers. That's not really the area I work in. The biggest issue that I have with wholesaling is disclosure. Disclosure, because we're not in the business of taking advantage of people, right? And so if you are a licensed agent, you have to tell people where you're getting paid from. You have to tell your sellers and your buyers how you're getting paid, the percentage you're getting paid. And wholesalers will market a property like to that investor that they don't own. As a licensed agent, you're not authorized to market any property that you don't have authorization to, let alone don't own. They don't know that you're marketing to sell this property, right? They think that you are becoming the owner. And so if you're an agent, you can't do that. That's a violation of your license. And I don't jeopardize my license for any deal, right? And so if you decide to go into wholesaling, make sure that you operate in integrity and that you are disclosing what needs to be disclosed. Hey, is it okay if I market this property? I say this because I've seen people call me and say, this person who I thought was buying my home has my property on sale on Facebook.
What is
Like, no joke.
and that's nuts, right? And there's a certain language for wholesalers that they have to put in the contract if they want to use, right?
Yeah, I can't think of that term at the point.
It's assignable too.
Yeah, it is, but you have to disclose whatever. That's the main thing is disclosure, because you cover yourself with liability. But for the sake of time, we're going to move on to this next exit strategy. The next exit strategy that you want to look into with real estate is called seller's financing. Seller's financing. What is that? When we talk about seller's financing, you may not be the person that wants to be involved in even walking the property, dealing with tenants, dealing with contractors. You just want to make the money. And so you are in a position where you have access to funds that you can loan to other people who are very savvy in flipping properties or identifying good deals. And so you can be the person who gives them the loan to be able to do so. They got to break the numbers down for you. Of course, it has to be someone that you trust, that has experience with them, interview them and do all the things that lenders do to make sure, that this person is qualified, but they're paying you the same way you would pay a bank back, and you put your interest on it. And so you may just be a financer when it comes to real estate, that you are making interest off other people's abilities to do deals. Seller's
You know,
financing.
I always find that funny because in residential, they call it seller financing. Mm-hmm. And then the commercial, they call it a master lease agreement,
That's true.
right? So it's always weird that why did you just change the term and confuse everybody? But seller financing is huge. It's definitely a way to get into real estate. Mm-hmm. So it's huge. And on the flip side, for the seller too, turn yourself into the bank. Why not?
Exactly. You are the bank when it comes to seller's financing.
So which strategy do you prefer and why?
So it is, for right now in this season of life, it's 50-50 with fix and flips and buying whole. It just depends on the profit margin. How much money can I make off this transaction?
So you're buying whole, fixing, flipping.
Yes, both.
You done made a new term, but no, I'm the
Both.
same way.
Both.
I'm the same way because the market is kind of balanced now today and
It's balancing now.
kind of
Absolutely.
either way. It depends on what market you're in.
Yeah.
Really how good you are as far as the
Yeah.
market in it. So I'm the same. I like the
Yeah.
buy and hold, but I like depending on what kind of class property it is.
We like good deals.
Yeah. Can that be a topic extra strategy? Good deal.
We like good deals. And so we spoke about the different exit strategies. We want to tell the people how can they acquire real estate. And there's different ways that you can acquire real estate. And one that's very popular, Malcolm, for people who you may not have your credit in order, but you got some cash. And so you can do what they call tax liens, investing in tax liens. And so you have to pay taxes on your property, period. But a lot of times people fall behind on
Period.
doing so.
Yeah, a lot of people lose their houses that way.
They do. And unfortunately, most of those people tend to be, I know in Chicago, and Cook County tends to be the minority community. And so you fall behind on your taxes. You have to pay your tax bills. They generally come out, I know in Cook County in Illinois, twice a year, or whenever they come out, you have to pay your tax bills. And so if you do not pay your tax bills by a certain amount of time, then the county, the government, they have the opportunity to sell those taxes to the general public. And so they'll hold a tax sale. There's different type of tax sales and different things like that. And so you may have some investors who have, again, they did the analysis, they ran their numbers to see if it's worth purchasing your taxes, your past due taxes on your property. They give what they call a redemption period. If that person who owns the property does not pay those taxes back within a certain amount of time after someone else has purchased the past due taxes, then that person can go and enforce that tax deed to become the actual owner. Or they gain some nice interest. And a lot of times that interest is more than what you would get in any savings account at any bank.
Yes.
We talking about 12%, 8% some places, 36% interest in some places. And so the seller is not just paying back, let's say if their taxes were behind $2,000. No, they're paying you $2,000 plus. The government going to put on their fees or whatever and whatever interest. So you can't lose with it if you know how to invest right, because either you're getting your money back with interest or you're getting the actual property. So I didn't have to go through a credit check. I didn't have to go through all these different things. The flip side is you didn't get a walkthrough of the inside of the property, right? So you got to be pretty savvy and try to find old pictures of the property if you can. But that's a easy and cheaper way to become owners of real estate property.
You know what? I'm gonna add something to that, right? I actually was talking to an investor today who makes money from tax sales, but they do it a little bit different, right?
Okay.
And I want to bring that to the table and drop this as a key.
Okay.
These investors nowadays are savvy enough where they're going to the tax sale, like Donna said. They're buying property. They're waiting the redemption period. Now, I'm going to say this. Every property does not have a redemption period. Sometimes you can go down to the county and just buy the property if it's already
That's true.
went through the redemption period
That's
multiple times. Nobody bought it, right?
That's true.
But other ones are waiting the 2 years. 2 years come up, and guess what they're doing? They're wholesaling the properties.
That's true.
They're buying them for pennies on a dollar, redemption period over, and they're marketing the property, say, hey, buy it as is for $10,000, $15,000, take it off my hands. And they're making a lot of money doing it this way.
And the redemption period varies, just like the interest varies per state. And so in Chicago, it may be 2 years. I can't think at the moment what it is in Texas, but it varies per state. And when we say redemption period, it's a time period that you have to redeem pay back those taxes before you face the possibility of losing ownership through the taxes.
Yeah, I know Texas is short. I can't remember exactly what it is, but Texas does not play with taxes.
Yeah.
Pay Uncle Sam. I'll tell you that much.
Yes,
So
pay Uncle Sam and pay the government as far as pay the county as far as with your property taxes. And so tax liens is another strategy that you can take to purchase real estate. Another strategy that you can use when it comes to purchasing real estate is real estate investment trust, REIT investments
REITs.
trust. Yes. And so, you think about there's different things out there, just like you can invest in stock, you can invest and do crowdfunding, you can get together with groups of people or groups that already exist and they purchase a lot of properties and you can figure out what it takes to be one of those owners and pay a certain fee. They're set up different ways with different trusts. And then they'll discuss with you how much your profit may be. And so you want to do your research, you want to ask questions, but basically you can invest in this real estate investment trust and they can have a bulk of real estate. It can be hotels sometimes, Airbnbs, it's various types of real estate that this group of individuals, companies that they may own and giving you the opportunity to invest, to become an investor, to get a piece of ownership in that. Make sure you do your homework to know when you get paid, how you get paid, when you get paid, what it takes to invest, and most importantly, what their profit margin is.
And most importantly, she said it twice. I'm gonna say it 3 times. When you get paid. That's why we're here, right? When do I get paid?
When you get
So now with that being said, so you went over 2 ways to get into real estate as far as investing.
Yes.
Are there various additional ways that you can utilize to get in the real estate sector?
Yes. One I'm not a big fan of is also the lease to own. And so there are situations where you may have a property that you're interested in and maybe you cannot financially afford the property, meaning that you can't find a bank or something like that, someone like that or an entity like that to qualify you for a loan. And so the owner may say, hey, I'll let you lease this property for a certain amount of time until you are in a position where you can afford a loan or get qualified for a loan to purchase the property. And so you can do that as well. I would just say make sure that it's a property that you really, really want, because you may lease it for 2 years, but in 2 years, you may not want that property anymore, but you're already in a written contract that you're going to purchase this property at the end of that term. So do your homework. Make sure it's a property that you really, really love. Make sure you have an attorney or someone to write that contract up where it works for you. And so you may be paying a certain amount. It's set up differently with different owners and renters slash buyers. They may charge you a certain amount that goes towards the rent versus some that goes towards the down payment towards the actual purchase of the house. And sometimes after the 2 years, they may become a seller's financer. They may become the bank where now they're charging you a mortgage. It's different ways to set it up. It just depends. Again, get you a savvy real estate attorney that has done this before to set it up in a way that works for you. And just make sure you know what you're signing up for as well. And so a lot of times they may say, well, you have to pay the water bill. You have to pay stuff that a general tenant would not have to pay. They may say you may have to pay the taxes while you're renting it. So just make sure, again, that you dot all your I's, cross all your T's if you're going to sign up for lease to hold.
Nice. You know, one I want to bring to the table that people don't talk about?
Sure.
And I'm going to label this as a key.
Okay.
Right? 'Cause you've been dropping a lot of keys.
Yes.
You unlocked a lot of doors,
Yes.
right? And people think this is just for commercial, right? It's something out there called non-QM loans.
Okay.
Right? And I didn't hear about this. My wife's an underwriter, by the way. But if you find a multi-unit property, 2-unit, 3-unit, 4-unit, and it already cash flows, cash positive, these non-QM lenders will give you the money based on how strong the investment is. Mm-hmm. So this is a way you get in, you spend less money, and you can get in the door and get some real estate.
Yeah.
Everything does not have to be your own cash. So again, you can find property that's cash positive, go out there and find the perfect fit lender, and they will give you the money to buy that investment, right? So that's slightly different than going to Fannie Freddie in the conventional way.
It is, but it falls under our 4th category of the traditional way of just seeking out a lender to purchase a property. And Malcolm just gave an excellent key about one of the type of loans that you can secure to be able to purchase property. the traditional way. And so there's different loans for different loan types. And so for some of our upcoming episodes, we'll have different loan officers. We'll have an underwriter, his wife again. Shout out to my sis D. Underwriters come and to break down and what they really look at. They're the people behind the scenes that you are not privy to or don't get to have a conversation with, that do the real analysis to see if they can close a loan. And so there's different types of loans based on what it is that you're trying to do. There's 2 or 3K loans where you're trying to do rehabs or repairs. Don't get too savvy where you think you're going to get what they call the FHA loan. It's the kind of the easiest loan to get. The lowest down payment tends to be, lowest interest tends to be, because, FHA makes you hold a property for a certain amount of time. And so I've seen people get caught up in trying to flip a property, and you look up and it cannot close because they are not meeting the requirements of holding their property for the amount of time that the FHA lender requires them to. So guess what? You fix this property up and you think you're about to sell it in 4 months, and your lender's like, nope, can't sell it, or, there's a penalty. So just know what type of loan is best for you. How do you know what type of loan to get? Based on the exit strategy that we just shared with you. Based on your exit strategies of what you're trying to do, then you identify what type of properties you're trying to do that with and what type of loan, when you go the traditional route of acquiring property, is best for you. And so we dropped a lot of keys, Malcolm.
Yeah. And
the different exit strategies and the different ways to acquire.
I want to leave on one more too, right?
Sure.
And this is the bonus key. You can buy a house from the auction. What does that mean, Donna?
So auctions is just that you do need cash again.
Or other people's money.
That's true. Or credit that you have available. But there's no, like, we're going to wait 30 days until you go through underwriting. And auctions for property is just any other way of an auction. And so it's a scheduled date. You need to sign up. You need to read the rules and regulations for that company. They may have a reserve fee that you have to put down, different things like that. And so you need to be present when the bid starts, know when the bid ends, and try to be really savvy at it. Sometimes I learned this: know what your end dollar is, and don't get so caught up in the emotions of bidding, because sometimes you're bidding against a computer.
So emotions don't work.
No,
and investments. Numbers. That's what it sounds like.
Numbers. It's numbers. Emotions should only work when you're talking about your forever home, and even still, you want to stick to a budget, right?
Correct.
So, but when it comes to the auctions, know what your at the end of the day, what your bottom line number is. Be present. Make sure you have, if they allow you to, visit the property in the time period in which they're giving you to visit the property. Just read the rules and regulations, and you have to be able to drop that money within a certain amount of time. And it's normally like 24, 48 hours or 70. Yeah, you're not going to get a lot of time to go pull the money from here or talk to such and such. Be ready. Be ready when you talk about trying to purchase a property through auctions. But it's a beautiful thing if your credit is not intact.
Yeah.
They're not checking for that.
True. Just another option to invest into real estate, like we disclosed with the other options that you gave them to. So, because everybody doesn't have the credit. So the auction is another way that you can come in and buy property, which I think I've done it before myself.
Absolutely. And our cousin Akila, she used to do it a lot with purchasing properties through auctions. And so a lot of keys, a lot of information that we have dropped today for you all. And so we're so excited about your real estate journey. And hopefully you implement these keys. You write down what your goals are so you can get started in investing in real estate as well. Malcolm, tell the people about this amazing book that you wrote.
So if you haven't got your copy yet, The Foolish Entrepreneur is a strategy guide to help you run a successful business. Get that book today if you haven't got it yet. And Donna, you are branding like crazy today. Our Legacy Realty is here today. But I want to talk about this book that you have and how they can find it.
Absolutely. And shout out to my team, Our Legacy Realty, where our mission is to help others build legacies through real estate. And so again, shout out to my team. Contact us if you need real estate services at www.ourlegacyrealty.com. Author, I'm so excited, so proud of this book. I didn't even do it really based off sales, but it is selling. I did it based off impact. There's a need there, and that's why I wrote this book. Who got the keys about building generational wealth through real estate? I've been blessed to be in a ton of schools, ton of organizations, churches, colleges, to expose young people about real estate, to do what our parents did for us, and so that they can be tomorrow's homeowners and investors. And so check this book out, whogotthekeys.com. Both books can be found on Amazon or on our websites, whogotthekeys.com. So thank you again. And remember, if you are looking to get into the real estate industry, we want you to apply for our Father Scholarship. In his memory, he exposed us. And so we want to continue to make an impact like he did for us and so many others. It's the John P. Rogers Scholarship. And so you can apply on our websites, and hopefully you are one of the winners. And so we can help you pursue your real estate career. This is another amazing, impactful, empowering episode of Who Got the Keys.
Peace.
Until next time.